Let's try it. I haven't done this before, so
Yeah, no, right on.
who knows?
Well,
Who knows?
So welcome, Michael Edesess. We're on the Heritage Wealth Planning YouTube channel. We're not live, by the way, but we are recording. And what a pleasure, folks, it is to bring on Michael here. I've been reading Michael for many, many years, and agree, disagree, everything in between. But what I like about him is he's a deep thinker, and I think our industry, the financial planning industry, doesn't have enough deep thinkers, frankly. And I enjoy being able to take concepts that are, I enjoy Michael's work, and I think anyone who is interested in financial planning, investment management, the whole thing, should read him for sure. Michael's coming to us from Hong Kong. So tell us about why are you in Hong Kong, Mike?
I landed here totally unexpectedly, but it was I've been here 10 years, and I was involved in I won't go into it, but I was got into something that was hold on.
Yep, you got it.
Yeah, I got into something that I was sort of a low point, but somebody that I had known before, who had a relationship with the Hong Kong University of Science and Technology. And we reconnected in Europe.
Yeah.
And she said, "You got to come to Hong Kong." And I said, "What?" And all I know is the next thing I knew, she had sent my CV to a department. The department was the then called the Division of Environment at Hong Kong University of Science and Technology. And they needed somebody to teach a course in environmental economics, and it just so happened I had done that before. Now I'm not really an academic, but I've every time wherever I am, I would always volunteer to teach a course at a university, and usually it was in order to learn it. It was some subject that I wanted to learn, and there's no better way to learn a subject than to teach it. And to take a course, I remembered that I used to fall asleep or not attend classes, so that wasn't going to work. But if you teach it, you learn it very well. So I happened to have taught it, and they needed somebody to teach it, so they asked me to come. So I came, and then I sort of kicked around at universities a bit here, and I've stayed, and I'm now married to a Hong Kong woman, and we travel a great deal until this doggone virus thing. We've been, just all over the world hiking mainly, and having a good time. And I can't wait until we can do it again.
You might just
hey.
Hi, how are you? That's funny. My you might see an interruption. I have my little dog right here, who his name's Pablo. He likes to make an appearance every now and again. And Michael, I got 4 kids, and one's at Georgia Tech, so she won't be here. But my other 3 are schooling from home, so they might by accident make an appearance. So just FYI, this is a whole new realm for everybody, man. It's crazy. But now, do you speak? Was it Mandarin? Is that what they speak out there?
In Hong Kong they speak Cantonese, which is it's confusing because the writing is almost the same. Well, it would be this. It's even more confusing because the characters when you write the language in Cantonese and Mandarin, it's the same, except that in the mainland they decided, Mao dictated this. He said, these characters are so darn complicated, which they are. Let's simplify them a little bit. So they use a simplified version, which looks almost the same, but some characters are a little bit simpler. Whereas Hong Kong and Taiwan use the traditional characters. But Cantonese and Mandarin are spoken differently.
Okay.
And they sound very different. They just sound very different. I compare it to like Portuguese and German or something.
Really?
Yeah, Mandarin sounds like Portuguese or Russian with sh's and zh's, and Cantonese sounds like a harsh form of German.
Was there Mandarin before Mao's? I mean, that's what I'm saying. Did Mao say we're going to take Cantonese and we're going to make it our own language? Thus Mandarin? Was Mandarin even preceding Mao?
No, I can't give you the whole story on this. These are all, there are actually many dialects in China. So Shanghainese is a different dialect, but they were all, I think Mao did say, let's all use Mandarin, but
okay, gotcha.
But in a large part of the neighboring province called Guangzhou province, Guangdong province.
Yeah, Guangdong, yeah, right.
They use mostly Cantonese, or they used to, but so many people moved there to take jobs from all over China that now there are a lot of Mandarin speakers there.
That's interesting. I had no idea. My wife's parents both spoke Chinese. He was a professor at Western Kentucky University for Chinese, and I never, to be honest, I always knew Mandarin and then Cantonese. I never thought about there's lots of different, kind of like India has so many different languages and cultures and whatnot. I imagine the same with China. And I wonder what kind of dialect. Anyway, that's interesting. I just know they spoke Chinese, but I don't know what that meant specifically. So they're both since passed, but that's interesting. Are you getting the hang of it, or are you pretty conversant?
No, I don't need to, and I tried a little bit. I learned some Mandarin, and then I tried to learn Cantonese. But even though my wife, she speaks fluent Cantonese like crazy with her friends, I haven't learned it. I don't speak it. I don't understand it. It's fine with me. I don't.
Have you seen just with the Hong Kong stuff? I mean, what's happening? I mean, is that?
Oh boy. Okay, that's a long story. It's not. I have to tell you, I did trust the New York Times until I started seeing the coverage of Hong Kong. And it's very biased. The problem is, like you have rioters in the U.S. in cities, you have some peaceful protesters, and then you have some violent ones.
Yeah.
The violent ones in Hong Kong really kind of took over, and the peaceful ones in the U.S., it seems that the peaceful ones try to chide the violent ones. Don't do that.
Right,
in Hong Kong, they really didn't do that. I mean, they make excuses for them, and every night for months, they were tearing up streets, stores, beating up people. They beat up Mandarin speakers. I mean, there's a kind of a sort of a racism or ethnicism. If you're from the mainland or own a business and you're from the mainland, then your business gets smashed up. And the police had a tremendously good reputation in Hong Kong, and they are good police, but they were overwhelmed.
Yeah. So
I don't believe that it's right to say that there was police brutality. There's always, in difficult situations, it's always difficult for the police. But I think they did the best they could here, and they've been portrayed very inaccurately in the United States. And the protesters are always called pro-democracy activists, and they're never called rioters, which is what they were. They now Beijing decided they're going to just put the clamp down on this, passed a national security law, which actually has similar provisions to security laws in other countries like Singapore, US. So whether it's a problem depends on how it's applied.
Are you able to walk around and just go to your routine business? I mean, you know what I'm saying? Is there some kind of, I have no idea. Is there some kind of crackdown where you're like, oh my goodness?
No. Oh, no. There's nothing like that. In fact, when there were the street protests, you had to be careful walking around. they tore up the street right near my apartment because they take a crowbar and they take bricks out of the street to throw at the police. So the street was torn up. And for several months you
Right.
were careful to go downtown, which is only about a 15-minute.
Because of the rioters, not because of the cops or the Chinese
Because of the
communists.
rioters.
Oh, right. Okay. Gotcha. And
Yeah.
I imagine if you did not see things their way, they didn't want anything to do with you, if that makes sense. You know what I'm saying? It's kind of like, I mean,
Yeah.
pro-democracy, but you damn well better be what we think, if that makes sense. That's what, I mean, similarities here exist for sure.
Yeah, I mean, they beat up a number of people. They set one guy on fire. It's unbelievable. Somebody videoed this. Just unbelievable.
And the New York Times was presenting it as if the cops are going in there just with, bully clubs like 1967 Chicago or something like that. Is that what you're saying?
Yeah, and it's not like that. It's just
that frustrates me because I've heard a number of people in Mexico who are living there peacefully, and they say, look, I don't know why you guys are so, the media is portraying Mexico as this like, drug cartel, police state. I mean, look, who knows? But I mean, I'm just saying at the end of the day, I've heard more people say what you're hearing in the media isn't what I'm seeing literally on the ground. And I even heard some people say that about Venezuela. And I'm not justifying, the Chavistas or anything. I'm just saying there's always more to the story. It just frustrates me that you always hear one side and then it kind of perpetuates itself as if everyone in Mexico is under the gun of a drug cartel. And it's like you don't even know what to believe anymore. You know what I'm saying? It's crazy.
Yeah. Well, I'm sure there are places in Mexico where it would be very dangerous. In fact, I used to go to Mexico when I was in graduate school, which was many, many years ago. I used to go there to purpose was to climb the volcanoes. And, people said you got to be really careful in some places. So, yeah.
That's no different than the U.S. I mean, I live in the suburbs, quiet as a church mouse. You got a couple of areas of violence and riots and crime, but the rest of the U.S. is just going by every day. It's anyway. Okay, so now you're in Hong Kong, but you write a lot on advisor perspectives and investment stuff. You're teaching a class on environmental science, but you obviously have a keen sense of investing, economics and stuff. And so what's your background on just analyzing investments, just analyzing economics and stuff? Like what made you go into to write all that? Because you're a prolific writer.
Well, thanks. It's not at all direct. I'll try to give a very brief. So I got a PhD in mathematics many years ago. In 1971, I got my PhD, and it was in pure mathematics, which means utterly abstract. I mean, it doesn't even use numbers. People don't believe it, but you see no numbers, in pure mathematics. It's all symbolism.
Okay.
And has nothing to do with the real world. In fact, at that time, because it was, the time of I was involved in the anti-Vietnam War activities and things like that, and in the math department, the belief was that all applications were evil. So you had to try to make sure that you didn't do anything that could ever be applied. And the area of mathematics people thought was safe because it would never be applied was called number theory. Now, you know what number theory is?
No idea.
Okay, part of it is prime number theory. Okay, does that begin to ring a bell?
Yeah, absolutely.
Prime number theory later became a part of encryption. Okay, so the basic method of encryption is you take a number that can be factored into two primes, but you can't figure out what they are. Nobody could figure it out, even your fastest computer couldn't figure it out. So you can use this for encryption. So no, it's not possible to avoid doing mathematics that might eventually be applied.
Right.
So it turned out that the area of mathematics I was doing was very soon, in fact, contemporaneously, to be applied in finance, or at least quote unquote applied, because
Right.
none of these things are really applied. They're
Right.
just it's I'm becoming familiar with this word performative.
Yeah.
You know, it's the application is performativity. That is to say, you act like you're applying it. You know.
Economics 101 right there. I'm telling you, it's just the physics and math envy. That's what economics have. The physics envy, essentially. We want to be a hard science, so we're going to pretend like we're.
Yeah. I gave I was in a debate about 3 or 4 years ago with Rob Arnott and Roger Ibbotson, who was a very, very bland character. When I made my presentation, I started out by saying it was about smart beta. It's like I said, smart beta is just a bunch of nonsense. But I said the roots of smart beta are found on October 6th, 1957. I'm not sure that's the right date.
Right.
That was the date that Sputnik launched. And as a result, the US got scared. We're behind in technology.
Right.
So the government started pouring grants on universities and companies that did technology. Meanwhile, the social sciences, which were then included economics, said, "Where's ours?" And so what they did was they started putting mathematics.
Yeah, man. That's where Paul Samuelson came. You know what I'm saying? That's the whole point. That's it right there.
Yeah, well, he was doing it already. I could have taken his course when I was at MIT as a freshman. I could have taken his course, but I thought I'd never use it, so I didn't take it.
Well, you should be glad you didn't, Michael. One of my clients is a physicist who went to MIT, and I obviously can't say his name or anything, but he said he took a Samuelson course, and he said it didn't make any sense. He goes, I couldn't understand it for anything. I said, well, this guy is a very well-known physicist, and he said, if this guy, he said, I couldn't understand what he's saying. His math didn't make any sense to me at all. And I said, well, that probably speaks well to the fact that economics profession is based on, is quite fraudulent, if that makes sense. And I hate to, I'm not put words in your mouth, but I just kind of chuckled at that. So that might be better off he didn't take one of his courses.
Yeah. Anyway, I've digressed too much, but when I finished my PhD, everybody else in the math department, in the pure math department, wanted to get a job in academia, but it wasn't what I wanted to do. All along, I wanted to get a job in technology. I assumed I would get a job in something in science and technology, but I don't know, at that time I had been involved in arguing against the Vietnam War, and a lot of the companies that I could have worked for were doing things like manufacturing anti-personnel weapons and things like that. And I felt a little bit funny about working for those companies. And a guy I knew told me that a company in Chicago, because I went to graduate school at Northwestern. He said a company was doing interesting things with math, and it was a finance company. It was A.G. Becker, which was very prominent at the time. It's gone, long gone, but it had the largest database of tax exempt funds,
Okay.
pension funds, profit sharing, endowments, and so on. So I went for an interview. They hired me. I didn't know what stocks and bonds were. I didn't know anything about it. But I learned quickly. They gave me Sharpe's book to read. And I read that and I said, yeah, this is not bad. This is interesting.
All right.
And I recently had lunch with Bill Sharpe.
Okay.
Yeah, no, in Santa Cruz, as it happens, last year. Very nice guy, by the way. Extremely nice guy. And
Sharpe as attack, not no pun intended. Bill Sharpe still a.
He's the thing is, whenever he writes articles, I mostly am very critical of articles in finance journals, but his are fine. His are good. He doesn't pretend to fancy mathematics. Yeah. When he uses math, it's simple and appropriate. Anyway, so I went to work for A.G. Becker. They immediately sent me. One thing they did was they said, okay, we've retained this young professor as a consultant. So why don't you work with him? Because I had a PhD.
Right.
So I go have lunch with him. And he told me when we're having lunch, he said, I really wanted to get my PhD in math, but I couldn't hack it. And then I asked him, so what are you doing for A.G. Becker? And he said, I don't know. It was Myron Scholes.
Oh, man, no kidding.
Yeah.
That's funny.
He was, he was sort of fun to have lunch with at the time. I think he's gotten more, whatever. I haven't seen him much since then.
So, I mean, that's, oh man, that's, wow.
Then they sent me to conferences, like the CRISP, Chicago Research for Securities Prices, and IQRF, Institute for Quantitative Research and Finance. And I was appalled. I mean, I see people give talks and some of the math is just nonsense. And I thought, do these people want to be mathematicians or do they want to be practitioners? If they want to be mathematicians, they better do a lot better math. But if they want to be practitioners, this doesn't really apply. This is you can only pretend to apply this. This doesn't really work. So, I mean, right from the get-go, I thought the math in this field is just a bunch of nonsense. I mean, there are a few papers that are okay, but mostly, and so I worked in the field for a few years, but I have a very hard time dealing with something where I think it's just all a bunch of crap. So I thought I got to get out of this field. This is not what I wanted to do for life's work. So I found out after a few years, I discovered that, and I also wanted to move because I like to go hiking. I like the outdoors. I wanted to move to a place like Colorado. Mm-hmm. Suddenly I discover in 1978 that there's a research institute looking for employees called the Solar Energy Research Institute.
Yeah, no kidding.
So I lobby like crazy for a job.
Yeah.
The thing that bothered them was I would be taking a gigantic pay cut. And I said, I don't care.
Bothered them?
Yeah.
Oh, yeah. Because they're like, we can't afford you is what they're thinking, I guess.
Well, no, they couldn't pay me except what they could pay.
Right.
But they said, the conventional wisdom is that if you take a big pay cut, you won't stay. And I said, listen, this is what I want to do. Yeah. So I did that for a little while, but it got largely defunded during the Reagan period, and also in the early 80s, it was big for a while because the price of oil went up.
Yes. Yeah.
There was concern about that. Then in the early 80s, the price of oil came back down. And so the concern about solar and wind energy were expensive. I wouldn't have believed even then that the price would come down as much as it has.
Well, never mind natural gas back in the 70s. Remember, the whole point with the oil and the coal was that the natural gas was so scarce. And now it's just, it's amazing it's amazing how things change over the course of, a couple of decades. It's nuts.
Yeah. I remember visiting before that, I was for a little while, I was with a small group of 4 partners, and we were doing consulting to institutional investors. We went to a bank in Indiana that was a client, and they're all wearing like 5 layers of clothing because it was cold. They said, we're running out of gas. Yep. And it wasn't true. It was, one of these things about, it was the result of regulation, actually, regulation of pipeline.
I tell you, I think Carter gets I'm not a fan of Carter necessarily, but he gets a bad rap. I mean, he was deregulating stuff before Reagan was coming on board. That's a fact. And Ted Kennedy too. And the interesting thing of just the history of energy is just the push for coal back in the late 70s because of the lack of natural gas. And now it's just natural gas is abundant and oil is, I talked to a lot of oil people. They're like, look, man, we're in a world of hurt because natural gas is superseding us for sure. It's crazy to me. So you did the solar thing for a couple of years. Then what?
Well, then I had to make some money. Yeah. What I did was I wound up writing all by myself up in the mountains. I did it. There were people in Colorado. I was living up in the mountains or the foothills and working out of my beautiful house. I tell you, it's a beautiful place. And a guy that I had partnered with a little bit before said he thought he could get an agreement from, at the time it was E.F. Hutton, but the division changed hands and wound up with Smith Barney.
Okay.
And if I could write a computer program, which I was very good at, to do this particular thing, then they would just pay for the number of users. It took me about 1.5 years to write it. Turned out very well, paid very well for about 10 years. Then I had to do something else. Right. So I wound up working with actually people that I had known from Smith Barney, who it turned out they wanted to start another company, and I developed some of the methodology and software that they used. It was called Lockwood. We got started with a $20 million investment from a billionaire. Company went for about 8 years and then sold to BNY. It's now BNY.
Yeah. Oh.
Yeah, I mean, the truth is I haven't worked a hell of a lot. I spent some time. I did some consulting work, and I did a variety of other things. But my paid work consisted mainly of 2 stints of about 1.5 years of hard work developing software and the principles behind it.
Well, when you were on taking our knot on in Ibbotson and just the various players in this industry, and obviously you're rubbing some people raw because they feel they've developed something that it simply doesn't, I mean, in my opinion, doesn't exist. But how do you, I mean, do you feel like you're a lone wolf out there, Michael? Because everyone has a better mousetrap and all the mousetraps fail ultimately. Man, it's frustrating me because I'm sitting there thinking, we've all heard the same thing every single year about something, and yet it's all, I don't even know what I'm trying to say, but do you feel like you're a lone wolf out there? Like, you and John Paul?
Yeah.
Or what?
Yeah, well, for an example, a few years ago, I was asked to come and give a talk at a conference in Australia, and I gave a talk, and then I was on a panel, and the panel was on smart beta.
Right.
And there were either 7 or 8 people on the panel, and they started out with a poll of the panel. They asked each of us something like, "Do you think smart beta is valuable?" And all the others said yes, and I said no, hell no. Then there was a coffee break.
Yeah.
A couple of people took me aside and they said, "Yeah, you're absolutely right, but nobody makes any money on saying this, so you're alone."
Yeah.
One guy came up to me. I mean, one of the things I did in my talk was I pointed out, and Gene Fama is supposed to be a lion in this field,
Right.
but his math, he doesn't know any math. He doesn't know what he's doing. And I think his 1992 and 93 papers are fundamentally worthless. It's just, so I pointed out some math,
I love it. Yeah.
math nonsense that he had done in my talk. And another guy came up to me during the break, and he said, "How can you do that? You can't win against Gene Fama. That's stupid. He's this."
Right.
And then he ran off, and I wish he hadn't, because I wanted to say to him, "Look, I'm not out to win, just
Right.
out to tell it the way it really is."
But the thing that drives me crazy, Michael, on the this evidence-based investing whole thing from it comes from DFA. I freaking hate that. I'm like, there's evidence. Oh my goodness. I sit there and I'm like, people fall for this stuff left and right, and I know people got to make. I get it, but there's no way. I don't. Is it just
Yeah.
because there's money to be made and trying to be math envy with the financial? Why do people fall for this stuff? It's the weirdest thing. I mean, evidence-based investing. It's frustrating.
Yeah. Okay, this is a little bit, this is some more, because I was sort of in and out of the field, and I haven't, I've steered, tried to keep my distance, because every time I wind up, somebody says, "Oh, I'm going to go see somebody's talk. You want to come with me?" And I say, "Okay, I come." And I say, "This is the same old crap it was 10 years ago. They hasn't changed, you know." But so I sort of keep my distance, because it just annoys me so much. But I have some history. So David Booth was
Yeah.
also at A.G. Becker. So I
Ah,
knew him,
okay.
and I like him. He's a good guy, and his ideas at DFA started out with a good and simple concept,
Yep,
because at that time
yep.
there was an interest in index investing, but you couldn't do a total market, because the funds were too small, and you'd have too small a portion in most of the other stocks. So they did S&P 500. That became the thing. So David Booth said, you're not really diversified, like the theory being theory that said the market portfolio is the optimum, which is, it's as good as any. And so you're not really doing the market portfolio, because you only have the biggest stocks.
Yeah.
So we're going to start a small stock portfolio. Besides that, historically, small stocks have done very, very well.
Right.
Okay, reasonable argument.
Yeah.
And then he came up with an even better idea, and I think this was David's idea. He said, okay, these other indexers, they're starting to become obsessed with this idea of tracking the index, minimizing tracking error. Why do you need to do that? That means you have to trade when you need to trade, and you have to trade now. What we're going to do is we're going to sit back, wait for somebody who wants to trade with us.
Yeah.
If that means that we don't track
Sorry about that.
perfectly.
That's my dog making his appearance. But sorry, but keep going. Absolutely, Pablo.
Okay. So, he said, if that means we don't track perfectly, so what?
We just let him outside there. Go ahead, buddy. This is as professional as we get here with at our home office and our dogs and children.
This is the way it should have been, I think, for a long time. I mean, this business about having separate, but anyway. So David told me that when they started doing this, they thought it might, you know, add a little bit, but actually it more than covered the fees. So he said they wound up earning more than they expected to from this passive trading. And I think that was quite a good idea. But then at a time when they were actually thinking about hiring me to do something, but nothing ever came of it. They were, I don't know exactly how it started, but they were working with or negotiating with or whatever some advisors who wanted to use DFA's funds. Because before that, DFA only offered 250K chunks. So individual investors couldn't invest. Their only clients were institutions. So some advisors got together and said, okay, if we kind of band together, can we use your funds? And DFA said something like, I don't know any of the details of how this came about, but they said, okay, but you got to go through training because we don't want just anybody doing this. So they go through training and they start regarding themselves as the elites, and then DFA gets really big and starts hiring PhDs, and it puts the Fama and French and Merton on the board. And I don't know, I think David is more of a regular guy, but I think he's a little bit starstruck by the academic, and I think Fama probably was good to him. He probably did him some good when he was at helped him get started. So and David doesn't. So David and Gene Fama co-authored an article on the diversification return, which is just a bunch of bunk.
When was David, that one from 92, 94? What was the, because my professor at economics, Howard Block, had given me a book on French Fama back in 93, 94, something like that. And I bought hook, line, and sinker. And I'm still heavy in DTV, value index. I could not get over my, I was 20, I just got out of the Army. I was 22 years old in college. My PhD economics gave me this thing from French Fama. And I said, small cap value, and I just bought that hook on a sinker, and I cannot shake that from my intuition. You know what I'm saying? It's because that's what you're raised on. But
Well, I mean, there's some argument based on the idea that these would be perceived as riskier stocks, and a history that they did do better. But what does running a regression add to that? I don't understand the purpose of those Fama French studies. They all, is this supposed to add something to your knowledge that over a period of 40 or 50 years, value in small stocks outperformed? What? I just anyway.
I had a guy on my YouTube channel, Michael, that. Anyway, long story short, he took issue with my thing that risk always leads to outperformance. I said, well, that's simply not true. If you would have bought the long-term treasury in 1982, you had no risk essentially from 1982 to 2011. You were clocking in 15 and a quarter. And the whole thing is just the whole stuff has got to make you look, I'm just a regular guy, but you got brains in this stuff, and you just got to be sitting there thinking, it's just got to look. I don't want to put words in your mouth, but you just got to be sitting there thinking, "What the hell?"
That's what I was thinking. Every time I encounter a conference in finance or a talk by an academician, I think without exception, although Bob Merton gave a talk that sort of defensive, trying to defend the usefulness of finance a few years ago, and it was good. I mean, he did a good job, and so, sure, there were some useful things, but option derivatives have some uses, definitely. So I don't, I wouldn't say, and his math is good. Merton is probably the only person in the finance field that I would say is almost as good as any mathematician.
Not even the best was just any. You know what I'm saying? Is it just because of money? I mean, it's literally, look, I'm not trying to, but at the end of the day, is it just because that's where the money is, that people are willing to pay big bucks for the starry-eye academia stuff, long-term capital management, all this stuff? Is it just because of money, Michael? I mean, or they truly believe that their numbers are meaningful? I just, any thoughts?
I was actually I was asked to write another article for Market Watch about how the Ivy League endowments have underperformed the market, and so I'm thinking about what I would write, and and also all the smart beta stuff is also fizzled. Of course, that's that's over any time period, anything can fizzle. But the question is, why do people keep investing in this? And I think the reason is this: the investment managers work at it, and they're smart. And people, at least in the United States, and probably in most places, simply can't believe that if you work at something and you're smart, you won't succeed. So you think that it must be. I mean, they'll ignore the data, the facts, to say that because they believe if they're working at it, it's their job. They go to work every day. They work at it. They're smart people. They must do better than the market. They
they'll
just
tell
can't.
You how smart they are too. Just ask them. They'll say, "Hey, this, this is a smart beta. This is what the PhDs. This is what the evidence base."
Yeah. What I don't understand is how these people can work at it, because for me, that would be a dead end in life, to go work on something where what you're doing, you're kind of aware that it's nonsense, and yet you pretend to do it every day. That's why I got out of it. Went into solar energy for a while.
You must be when they see Michael Edesess on the manifest for a conference, you must be like Nassim Nicholas Taleb when it comes to economics. People are like, oh, this guy, you know what I'm saying? You must be have a they must be, oh, now I gotta deal with Michael, you know what I'm saying?
Well, I don't know. I don't do it much. I mean, I haven't been invited much. I don't do it much.
I'm sure you haven't been invited much just because they don't want to. What do you think? Just all right. So one of the things about financial, can we? And I didn't, preface this on anything. It just occurred to me. I've always been dismayed by this idea that the 4% rule, or there's some kind of academic-based stuff that says if you do this, this will happen. I don't even care what it is because we have no clue. We only have 100 years of investment data, and if you look at, instead of rolling 30 years, we just don't have enough evidence to show anything going forward. But people, they literally plan their retirement on this stuff, and I just find that to be I don't know. I just find it kind of creeps me out. What do you think about it? And I'm not bashing Bill Bangin or anything. I don't mean anything like that. I'm just saying, man, there's no evidence to say if this happened in the past, it will happen in the future.
Well, my opinion about the 4% rule and that kind of thing is that it really there's one key question that should be asked, and I've thought about trying to put this together, but I don't do anything without some partner, because I'm not a businessman. I don't. But I think that the big question, especially for people that are older, but
Yeah.
not necessarily very old. I mean, let's say 50 or older.
That's me, 50
Maybe,
years old, man.
yeah, maybe not even 50, but you're sort of planning for the rest of your life, and
Yeah.
how are you gonna have an adequate income. And the big question really is, what's your relative weight placed on the one hand, making sure that you don't run out of money during your lifetime, and on the other hand, making sure that you can leave a bequest.
Yeah.
Because at the one extreme, if it's if the only thing you care about is not running out during your lifetime, then the answer is simple annuities.
Yes. Yeah.
I mean, it's just the answer. There's no question about it. I wrote an article about this, and I showed that this is way better than, well, first of all, the 4% rule, or now the 3% rule,
Yeah,
whatever.
right.
It's not a slightly more complicated rule will do better. But if what you want is to make sure you don't run out, then an annuity does the job, because that's its function.
100%.
Now, if you have some weighted preferences, partly for not running out during your lifetime and partly for leaving some money, then you come up with some mix of annuities and investments to suit the weighting that you believe is the most accurate you can do. So I don't know. I think I even worked out some formulas for this, but I set them aside a couple of years ago.
If let's say you want to leave a bequest, but you don't want to run out of money, wouldn't annuities with like a second and die life insurance be added? I mean, that would seem to be a pretty efficient way to doing that, because you're saying, we're going to fund the premiums with these annuity payments that we're getting.
Yeah. Yeah, no, that doesn't, no. I mean, that would be too much to go into that. But it doesn't make sense to get annuities and life insurance at the same time, because it's like it's kind of like buying and selling at the same time.
Yeah, I was gonna say you're betting.
They cancel each other.
All right, I got you. Yeah, right on.
Uh-huh. Yeah.
That's one of the problems with these long-term life insurance with a long-term care rider policy. You know what I'm saying? It's like are they underwriting you for living too long for long-term care, or are they underwriting you for dying too early for the life insurance? And there's like, I mean, the two things are at polar opposites. You know what I'm saying? It's like kind of,
yeah.
That inherently has an inefficiency in there. I mean, it's another product that seems to be too good to be true, actually. Which,
yeah. Well, I think that the too much of the emphasis in financial planning and advising goes into what to invest in, where you actually can add probably no value at all, or very little value, whereas the decisions about how to use insurance-like products, that's more complicated. And if you can do that right, if you really understand it well, then you could really add a lot, I think, in that area.
Couldn't agree more. It irks me to no end, and I'm begging people because I'm a financial planner. I say, please stop the asset under management fees. Just charge a flat fee to do real financial planning. It just, because everyone, Michael, from clients on down, they think financial planning is investments, and it's just not. I just
yeah. And most people, when we started the company that was called Lockwood, then when it was sold to BNY, they merged into Pershing, and which they had also bought at the same time. But when we started it, we started out with the idea that we were going to really provide we had a very nice computer program. It was just beautiful, and you move things, and anyways, long story. But and it was really a comprehensive approach to planning somebody's finances and investments. And there were a few Lockwood presented itself as a platform for independent financial advisors,
Yeah.
and it basically tried to winnow advisors away from companies like Merrill Lynch and Smith Barney to get them to go independent and to use Lockwood as its, provide all of its what they needed.
Yeah. Yeah.
And there were a few, some of the best advisors who used our whole initial set of tools that really enabled them to work with a client to get, so that they would really understand what they could
Right.
do, how they should do it. The most successful guy, his clients loved what we were doing, but he was in Bellevue, Washington. All his clients were Microsoft employees. The other advisors, it turned out that most of them, they didn't want to bother with that stuff because they would just let the clients believe that they were going to make them more money with their investments, and never mind all the other stuff.
I just that actually just ticks me off, because how much money is being wasted on the silliness that could go to making grandma provide 529 plan for a child, but instead we're going to pay some investment manager 1% of fee, which is just a net loss to society as a whole. I hate to say it, and certainly to the client. Let's talk about, you had written an article on the transaction tax. I actually did a video just a few weeks ago before I came across your article, and I said, look, I'm not a fan of Kamala Harris, but I got no qualm with the transaction tax. I actually think, if anything, it will stop to some degree, or at least high frequency trading and algorithmic trading and whatnot. And it was interesting, your article, because Vanguard, I was stunned that Vanguard was saying this is going to hurt the middle class. I was like, how is it? How? And then when I dived into your article, I felt that it was very disingenuous what Vanguard did, which concerns me deeply. That Vanguard seemed, because remember, Bogle didn't even want ETFs. Bogle's like, I don't want that. It's going to be high trading and stuff. And it just seems like Vanguard is shifting more and more and more in that direction. I'm not trying to bash Vanguard. I do want to talk about the transaction tax, but I'm sitting there thinking, why is Vanguard doing that? I don't understand. I don't get it.
Yeah. Let me tell you the origin of that was the second article I'd written about Vanguard. And before I wrote the first one, here's what happened. Somebody, I think I might have already written an article about transaction. Yeah, I think I did. I wrote an article about transaction tax. And then either somebody pointed this out to me, or I stumbled across something on the internet that was a Vanguard paper, just like 2 pages. And it said this, it's what I wrote about in the first article. And it said, tax will hurt the middle class or whatever. Right. But it wasn't on a Vanguard website. So I searched Vanguard. I mean, I did everything I could to find it on Vanguard, right, and I couldn't find it. So I thought, this is a fake. So I wrote to a couple of people I knew at Vanguard, and the subject line of my email was fake Vanguard research. Right. I warned them. I said, somebody's faking Vanguard's research. This is not Vanguard research. It just doesn't resemble it. It's somebody's faking it. Right. And so the people I knew, they sent it to somebody, and the public relations guy contacted me, and I think he's the one who told me. He said, no, that's our research. But they were good about it, because they did communicate with me, and then immediately after I wrote the first article, they said, okay, we're updating our research. And then I, as I said in the article, I communicated with them. And we had a little bit of back and forth. And possibly as a result, they didn't try to charge anything for what they would call transaction cost, because I said that you can't estimate any transaction. You don't even know if there is any transaction cost, and you certainly can't estimate what it is with it. Any kind, it's just a wild estimate.
Right.
You know? So, yeah.
And they they backed away from the initial research, but they didn't back away from the idea that this will start hurt the middle class. So they might have said, yes, Michael, you called us out, but we still hold by that, the regular average Joe investor will get smacked by this. And but the evidence.
In the follow-up, in the second, in the revised, the updated, which they came out with 6 months later, it's the headline is essentially the same.
Exactly.
But the illustrations are completely changed. So they use a different time period to try to show that it costs something. They use a much longer time period. They use a diagram that makes it look like, oh, you get charged for this and this and this and this. But the cost is much less. They presented it as if the result is the same.
Well, the thing that's odd to me is that they're saying if we have a transaction tax, it'll make an illiquid market. I mean, what is there any evidence of that at all? I mean, why? I mean, it's what billion shares are trading. So if it's only 3 billion, that seems to be that's still a liquid market. I don't understand. I read your article. I'm sitting there thinking, I literally don't understand their reasoning.
I don't know what their reasoning is either. However, I have an inkling of the possibility. There have been some articles written about transaction cost in finance journals,
Right.
If you look at those articles very carefully, like nobody does,
right?
I'm quite certain that nobody actually reads these things with any care, even though they're supposed to be peer-reviewed. They basically assume the conclusion because they have to make an assumption about what the transaction cost is. So one of them that I know of that's been cited several times, it assumes the transaction cost is half the bid-ask spread. Okay, why?
And they don't have any. They just say, "We'll have to start someplace." So that's what.
No, they just assume it. They just state the assumption and that's it, and then proceed. Yeah, they don't give any explanation for why they would assume that, based on, but there's no reason to assume that. You have to, try to figure out what happens when there's a bid-ask spread. Anybody can you can anytime we trade, we can post a bid and an ask if we want. Doesn't mean we're going to make money.
So basically, pure speculation. I mean, the evidence that they use to hurt the middle class is completely speculative, and it's not. It's just not based on any math that's of any value whatsoever.
Yeah, I mean, there is a little cost, of course. There's a tax, but this is another argument for the transaction tax that I just thought of today. I was thinking about this. I think shifting to consumption tax is a good idea. The problem with consumption tax is that it does tend to be more regressive.
Oh, absolutely, yeah, right on.
But this particular one is not so regressive because, in fact, the most consumption taxes, like sales taxes, the burden falls heavily on people who spend more on subsistence. Well, maybe not subsistence, but the ordinary everyday consumption items. The tax will be mostly paid by those who do a lot of trading in stocks, who own that's mostly the wealthy. It's not the smaller investor. So it will have a a small impact on the small investor, but not much at all. It's less than even than the cost of an index fund.
Well, the thing that frustrates me on this Vanguard argument is like, wait a second, is a so going back to Bogle, I mean, investing is not speculating. Investing is being there for the long term. You know, Warren Buffett said basically 30 chips and then you can't trade anymore along those lines. And you just buy, you know, and that's it. And that's what investing is. I'm in with you for the long haul, and I'm going to up and down, but I don't care. It's like my house. But the transaction tag or the high-speed, high-frequency transaction, whatnot, that's pure speculation. It's pure, trying to get. I mean, it's not investing, and that's not good for long-term investors, no matter how we look at it. And I just, it's just odd to me that Vanguard. I used to work at Vanguard in 1998, 1999, and 2000. And I was there when Bogle was kicked out, and I got an email, believe it or not, from Jonathan Clements, say, "Hey, what's the inside?" And he didn't know me. I emailed him one time, and he happened to see us from Vanguard. And I never emailed him back because he wanted some inside scoop on Vanguard. I said, "Dude, I'm just a phone jock. I don't know." But anyway, and I remember Bogle was not happy about that, and I'll never forget that. And they had Jack Brennan took over, and then they started going more and more. Now, I still like Vanguard. Everything I have is Vanguard, but is it almost like capture? Are they being captured by the big players in the industry to, because Vanguard's owned by shareholders, but, you and me combined aren't the equivalent of, some of these big institutions for our holdings. I just wonder if they're being captured by the industry as a whole. I don't know if that concerns me.
Yeah, it does seem to be some kind of capture. I don't know. I mean, it could be just a kind of, I don't know what term to use. The word cronyism comes to mind, but I don't know. That's a little bit too pejorative. But I mean, people, the CEO of Vanguard pals around with CEOs of other finance companies, and Jack Bogle was able to pal around people that he totally disagreed with, and and they still liked him. I think, I don't know.
They probably liked him up front, but behind him, I'm sure they're like, Bogle, you know what I'm saying? Because he used to. Hey, so if you don't mind, so I'd also like to talk about MMT a little bit, Michael. Just the
sure.
I find the disparagingness, if that's the right word, on MMT a little bit. It's a little bit odd, and I think I know why. We talked about this before if you start recording, but with Stephanie Kelton, thrown in with Bernie and whatnot, everyone hears MMT, they immediately think socialism, and I don't know that to be true, and I find that I just. Talk about your thoughts on it, if you don't mind, because you had written an article in Advisor Perspectives back in June that was actually quite good, and just talk a little about modern monetary theory and what your take is, if you don't mind.
Yeah. My thoughts are basically what was in that article, because I had known very little about it before I read Stephanie's book and interviewed her, and after I did that, I thought about it. I thought, what's going on here? I mean, I really wasn't too sure what the heck was going on. And then finally, I thought, I think I got it. Okay, I think I get it. And it was what I wrote in the article. And there was somebody who runs another publication where he takes articles from here and there called Global Economic Intersection. He asked me if he could republish it, and he said, you're the only one who got it right. I've been trying to tell people this is not really economics. The problem with it is not really economics. It's political.
Yes.
So it first of all, it states a truism, which is that if you print the money, you can print as much as you want. So you don't have to borrow, you don't have to tax, because you can just print it. Yeah. And it turns out that all the economists agree with that. Yeah, you can do that. But you can't print too much of it or you get inflation. Right. So MMT in Stephanie's book, she says the focus here is on inflation. So how do you make sure you don't print too much money? Well, the limitation is real resources, whatever that is. So employment. If you have unemployed people, then you could put them to work by printing more money, then that won't cause inflation, because you'll just use it to employ resources that are idle otherwise.
Exactly. They're dead. Yeah.
So, this says this is reasonable. The pushback against it has to do with, well, how do you decide those things? And she adds another something that doesn't seem necessary, and that is that she says that the determination of how much money there should be made by Congress.
Right, that's right.
And here, I think, is where she gets into trouble, because you can't trust Congress to do that.
Exactly.
But nobody can just come right out and say that.
Right.
In fact, you can't trust a democracy to do that, because as I say in the article, you have a tragedy of the commons problem.
Exactly. Yeah.
If everybody votes their pocketbook, they'll say, okay, hand me out some more money and take less in taxes.
Yep.
And if they vote people in that will agree with that, then you'll get too much money printed, and you'll get inflation. So this is why the very vehement objections to MMT. It's not to the theory, which the economists say, yeah, of course, you can, if you're the printer of the issuer of the currency, you can issue as much as you want. There's no constraint. You don't have to balance your checkbook or balance your budget.
Right.
There's another interesting thing about MMT, which really has to do with the origins of a fiat currency, and this is sort of fun. Stephanie gives an example which actually comes from Warren Mosler, apparently the originator of the theory, and he says that the only reason for taxation is to require the currency to be used. So his analogy, or he says it's what actually happened. He said he asked his children, who were like teenagers,
right,
to perform certain chores, and he said, okay, if you wash the dishes, you'll get 3 of my business cards.
right.
If you do something else,
Right.
you get 5 of my business cards. So they didn't do that.
Right.
So he said, why didn't you do it? And they said, what are we going to do with your business cards? So he changed it a little bit, and he said, okay, for your room and board, you have to pay me 30 of my business cards a month. Now they went to work because they had to earn the business cards, because now it was a currency.
It had a value added, exactly.
Yeah, and you made it a currency by collecting a tax, by collecting taxes. So this is sort of a fun feature of the MMT theory. But beyond that, it seems to be pretty much just you can print all you want, but you shouldn't, because you have to worry about inflation, and everybody agrees with that.
No one, exactly. The question is, who is the arbiter of who was too much inflation? And if it's Congress, no. You know what I'm saying? That's why pure democracy is not what will work. Is certainly, I could not agree with that more. I mean, my goodness. The last thing we need is a bunch of big government spenders in there who are just, don't tax you, don't tax me, tax the guy behind the tree. That's exactly what's going to happen. You can see that a mile away.
Yeah.
So everyone says if we have a huge debt to GDP percentage, going back to kind of combining MMT, if we have this huge GDP, debt to GDP, no one's going to want to buy our bonds, blah, blah, blah. And then I just
Mm,
look, I say, well, we have this example right now called Japan, and Japan
mm.
doesn't have this. So what's your take on Japan? And I'll let you get out here and just say, but I'm sitting there thinking, all these people say this can't work. It's almost like the old Phillips curve in economics, which is silly. The whole thing's just nuts. But I'm sitting there thinking, we
Mhm.
have this test case. It's been going on for years. And I read this guy's book, Richard. I just had it, Richard Koo, The Holy
Mhm.
Grail of Macroeconomics. And it just don't have that. We don't have runaway inflation. We have hardly any unemployment. We have low interest rates, low growth. And yet the GDP is, 2.5 times, debt to GDP is 2.5 times what we have. And I just sit there and think, how do they quantify Japan? I don't know if you have any thoughts on Japan, what's going on there.
Well, not an awful lot. All I know is that the most of the debt in Japan is held by Japanese.
Yeah,
So they always say they owe it to themselves.
right.
So it doesn't really matter. It's not going to devalue the currency. But beyond that, I really can't say. I don't have it's not something I've thought about a lot.
But we own most of our own debt too. That's what the MMT people advocate. I said, I mean, someone, I'm not saying you have to do, but someone on the anti side would have to say they have to have a thing to talk about Japan. They always say it's because they own most of their own debt. I said, well, what do we do? I mean, my goodness, the vast majority of our own debt is owned by ourselves. China, they have a big amount, but it's just an odd thing, Michael, that people say this can't work because the old theories say they can't work. I'm like, but has anyone ever actually gone into the old theories? And we're still teaching the Phillips curve. We're still teaching all this stuff. It's just
Yeah.
kind of going back to, closing a circle about finance, the old theories of, French Fama, 3-factor portfolio, now 7-factor portfolio. And it's just like, it never stops. You know what I'm saying? It's like, we always have these theories that worked until they don't. And then we're just going to add a couple layers to it. And now it worked this time. And just, it's weird how many people I don't understand why people just can't see through that stuff. It's weird to me, but I don't know.
Yeah. I think there's one of the articles objecting to MMT. I don't know, it might have been Larry Summers.
Yeah.
I'm not sure whose it was, but they brought up another debunked theory, or so it said, and that was the Laffer curve.
Yes.
But the funny thing is really a certain similarity between the Laffer curve and MMT, because the Laffer curve, it's absolutely true. I mean, there's no question, it's true.
Absolutely.
The only question is, at one point on the curve, should you stop taxing? And that should be the subject for debate. But it was interpreted to mean you can lower taxes all you want,
Man,
and it will just increase government revenue. And that doesn't say that.
no, not at all. Arthur
So I
Laffer
think,
never say that. I mean, I presume you'd never say that. And
no, I don't think so. No, I doubt it.
in fact, McCain, and I'm not a big fan, was never a big fan of McCain, but he made the argument, and when he was running against George W. Bush in the 2000 primary, that says, look, we've already lowered taxes. You continue to lower taxes, it doesn't help because the taxes already, essentially 50% of Americans only pay, FICA. And I
Uh-huh.
always thought that was a great argument. So the Laffer curve has served its purpose, but it's done now because we've already got that excess taxation out and allowed it to increase revenues. But you can't just keep going back and saying if we lower it from 28 to 20, it's going to have the same thing. It's just that it's kind of like the race at the bottom of indexing fees. Fidelity's got 3 basis points, Vanguard's got 10, and DFA has 0. It's like, all right, going from 1 to 20 is great, but going from 20 to 15, it starts to have a less of a economy, if that makes sense. The same kind of thing with taxation, the Laffer curve. And yet still a lot of Republicans, we keep raising lower taxes, we'll raise revenue. It's not,
Yeah.
there's nothing there.
Well, there's some concern, I think, and it could be legitimate, that the same thing would happen with MMT if you go around saying, "Oh, gee, this shows that you can spend all you want," and you know.
I completely agree. I mean, that's thus it cannot be regulated by Congress, because that would be the argument, like, hey, just give everybody new cars. Okay, exactly. Just
Yeah.
that's the thing about economics. I wish they'd say there are. you have these Phillips curves, these graphs, supply, demand, and all that. At some point, though, there does become a law of diminishing returns, and that can quickly be at the precipice where we're all going bankrupt. But
right, right.
well, let me let you get out. It's been, man, Michael, it's been fantastic. I know we're thinking we might be able to talk politics a little bit, but I've already got you. It's 10:22 time, and I got to get on.
Maybe we can do that another time.
Yeah,
but,
I'd love to, man.
Because I think we'd probably get along well, actually.
Well, I was raised on the left by my parents, big lefties, Gus Hall, Angela Davis. They had buttons for Gus Hall and Angela Davis, and I'm from Maine. And I went to the right, and now I'm certainly more of a populist libertarian, if that makes sense. So, that's the thing when you read and you consume stuff of nature, that you have an open mind, you get to see where other arguments actually can lead you to come to say, maybe this MMT thing isn't socialistic necessarily. There is some problems, but having an open mind is a wonderful thing. You know what I'm saying? It really is.
Yeah. Okay, well, I enjoyed it. And,
absolutely. I'll put links to show notes and on all your articles. Do you have like a website or anything where people can follow you on Advisor Perspectives? I know
I haven't, I just haven't done that. I did several years ago, and I don't have a staff or anything like that, so I don't.
Well, you're hiking. You're hiking all over the world. You got better things to do than manage a website. That's for sure.
Yeah, but my articles are there is a site where you can see all of my Advisor Perspectives articles, but I've written like about 120 of them, so it's hard to. And then there's I've written for Market Watch, and I think you can see most of them at Market Watch by Googling me and Market Watch. Also, I've written several for the South China Morning Post, which is a good, actually, if you want to know what's going on in Hong Kong, that's a good, there definitely is still freedom of the press in Hong Kong. I don't think that's going to change. And the South China Morning Post is a good, unbiased source.
Good. Well, I'll put links to your articles, and I appreciate, Michael. I tell you, I follow your stuff, big fan, and just keep spreading the good word. And let's maybe revisit after the election, see how things shake out, and do another one if that works. If this guy wants to go poof, so I'm going to let you go, and I appreciate it.
Okay.
Thank you, sir.
Okay. Thanks.
You're welcome.
So long.
We're going to hit end, Pablo. There you go. We're going to hit right